Good morning, everyone. This is Brad Matheny. It is only 8 o'clock in the morning, and look at this market trend. This is the SPY chart. And even though we were looking for a breakaway in trending or carryover mode, obviously the breakaway is to the downside. The bullish support has not been found. We're really just breaking downward. Look at the Japanese yen is down 6% today. And German DAX is down 2.25. SPY is down 2.6. NASDAQ down 2.8. Dow Jones 2.3. These are huge moves, guys. Bitcoin is down 4%, $2,600. And look at this gap. We broke again, gapping downward, broke below this lower trend, really trying to find support. And if we come back out here to a daily chart, we're going to have to go a ways back right now to try to find support. This is a pretty solid breakdown, and we're going to have to come back down into this area and this area to try to find support. This is a solid 50% pullback. Let me grab this and pull this all the way up to this rejection point. I'll call it right here. And sure enough, we're right at a 50% rejection point. Okay, so what do I think is actually happening here? I'm going to still argue that this is a broad sector rotation. I think that the uncertainty with regard to the elections and the fact that we're seeing the foreign markets really collapse. I mean, the Japanese yen has just fallen out of bed. And this is the Nikkei. I'm not referring to the yen, but it has just completely fallen out of bed. We're going to have to watch this for contagion event. We're going to have to watch this for some real deep downward trending here. None of my other indicators are really warning that the markets are entering a big pullback or a big downward trend. So I'm still suspicious that the markets are really trending upward. And like I said, today I'm going to be doing my updates. I think I have them over here. Let me check. Get rid of that, get rid of that, get rid of that. There we go. So these are my indexes from last week. And you can see that last week we had a huge market move higher in the ratio index, just indicating very strong speculative and upward valuations growth. Additionally, we had moderate pullback in the trending indicators, still in trending mode, still very much in trending mode. We had a big move in the base trend index, which indicated strong demand for US dollar. You can see we had rolled downward. We had seen very strong demand for US dollar-based assets, and this is still holding up. Now, granted, we're kind of in the middle of this bar right now, but again, there was absolutely no warning that this move was going to happen. We had, I'll come back over here, we had moderately strong support for commodity deflation. We had moderately strong support for the devaluation cycle phase coming off of these lows, finding support above the green standard deviation channel. We had moderate support for the innovation index. We had upward trending. This is an invert accumulation phase index. We had upward trending set up on the monthly chart, indicating that we were moving into potentially bullish trending. We had leading index was pulling back after this flag apex, and we could be looking at just mild volatility or moderate volatility through this apexing area. But as we continue to move over to the other data, fear index was weakening. We didn't have any real moderate fear. The cash flow index was staying fairly solid. No real sign of a breakdown. And, you could argue that, maybe this is a failure of my systems. Yeah, maybe. But you could also argue that, you know what? Maybe this is just some sudden crisis or panic that's driving the markets. We had a pullback in the volatility index, but nothing too serious. We're currently down around this 13, 14 area right now. I really don't argue that we get into bearish trending until we get below this 10, 11, 12 area. So we're close, but not quite there yet. We have valuation index was holding up in a positive manner, and possibly rolling downward here, but still very, very strong upward revision off of this low back in October 2023. And of course, the US stock market index really flagging out over here, relatively strong, still pushing upward, nearing the flagging formation. And lastly, the valuations index, which is now currently higher, way back over here. And this is telling you that stocks are at current price levels a value, a really strong, a stronger value than they were a while ago, meaning 2, 3, 4 months ago. And we've broken out of this range. We're right here at this additional Fibonacci price amplitude arc. I would suggest that this is very much a pullback, a panic, and it looks like the panic is taking place more so in the European and foreign markets than it is in the U.S. Although by the end of today, I'll bet you we're going to see a moderate move down here as well. We're going to need to just let this system play out. And what I wanted to highlight here was that we are seeing deep trending, very deep trending. You can see this big breakdown. You can see, yep, there comes all my data that we're trying to bounce off of this support level. And I wanted to highlight over here, when you come in here and you look at the daily using my new systems, which again, these are still in development. Okay, we have moved right back into the 382, called the ultimate 382 support level. This is where we're expecting price to essentially make or break a potential support level. The Bollinger Band system, the adaptive Bollinger Band system is bearish. The 382 level is bearish. The unique 382 level has gone bearish, bullish, bearish. We're below that unique 382 level, and we had just gone into a strong bearish trending mode and then reset off of these new highs back here the last couple of days. We are still in bearish trending mode, folks. This is not quote unquote bullish here. We are still in bearish trending mode. We come back here to hourly, very strong downward trending below both 382 ultimate and unique levels. This is really our kind of our line in the sand. When you're looking at this, when we get above both 382 levels, this is predominantly bullish. When we come down back into this area, we go back neutral. This means that we're coming from a high, establishing potentially a new low, and once we break below these previous lows like we had here, then we're in bearish trending. So right here, technically that's a new ultimate low. We are in bearish trending, and we should be staying in bearish trending to the downside. So we are below the ultimate 382 level right here. We're looking at downward trending, and we're looking for price to move down to or below the last known ultimate 382 low. Sorry, the last ultimate low. And if we set up a new low, then we are in downward trending, and it's going to continue to establish new lows. So we're looking right now for this market to attempt to find any support. At this point, we could be looking at a very deep move down. You can see here the downward trending that we saw, the acceleration and downward trending, and we're building a little bit of support, a little bit maybe right in this area, which again comes all the way back to this support level here. So if I spread this all the way out, you can see this support level coming through this range is acting as our initial support right now. We're going to see how this 528.30, 528.25 level holds up. And let's come back over here to the SPY. And there you go. So we're looking at that 528.30 area right down in this area, acting as potential support. I'll draw a horizontal line to show you. 528.30 roughly. There's that support from way back over here in May 22nd, roughly, of 2024. So you can see we have technically been bearish since August 1st. This is an hourly chart. We're below the 382 level, the ultimate 382 level here, folks. This entire time, we have been nothing but bearish, looking for bearish trending. Okay, that's what I want you to know about this new system that I'm working on, is that it provides you counter trending opportunity here, a little bit of a bullish pullback, going into bearish trending overnight, a little bit of a bullish pullback, but generally it's designed to help you see trends more clearly. Here, for example, overnight, we cleared the ultimate 382 level and continued upward until it failed, started establishing new lows, cleared the ultimate 382 level, then went bearish right here and has stayed bearish ever since. So I want you to be able to see these trends like I do, and be able to really play them. And again, they can go all the way down to 1 minute. So we come down here to 1 minute, clear the drawings, and look, here we are, 1 minute. We've been bearish pretty much all morning, setting up new lows. That's what these diamonds are. New lows, new lows, new lows, new lows. We went back into bullish trending here, okay, in both the 382, ultimate 382 trending and the pressure system. Then it rolled back into bearish trending right over here. This is still green. This is longer term. This is shorter term. This is the unique 382 system, and the pressure system went back to bearish right here. So you can see we've been in a downtrend from roughly here to here. Whoops, back here, right in that area. Now we've been in a moderate uptrend from here to here until we got this breakdown bar. It's been bearish from here to here, and now we are in a bullish trend short term. That's what this is showing us here. We're on a 1 minute chart. So this is showing us, very short term trending. And you can see the trend changes direction, bullish to bearish, to bullish, to bearish, to bullish, to bearish, to bullish, right here, right at this bottom. And the pressure system is designed to monitor price reactions based on shapes of candles, not necessarily just close to close ratio or are we setting new highs or new lows. It's designed to measure pressure in a unique way, looking at shapes of candles. So ideally, when we come back here and we use the system in a 4 chart layout, we can get a pretty good understanding of what's taking place. On the 2 minute chart, we're getting a little basing. We're off our lows, not quite bullish trending. We would need to get above this level to get into full on bullish trending. Even if we were to come up right now, it would be a counter trend rally. We are below this level on the 5 minute. We are starting to see a little support build. We need to see what happens at this level, see if we can get above this level. And if so, then we're at bullish trending once we get above this 534, 535 level. And again, bearish trending here, new lows set up, still setting new lows. That means that we're technically in a bearish trend. You can see here that the ultimate 382 level has moved down to this level. So we have a long way to go. 544 up here. And same thing here, 546. Still waiting for this to show some signs of life, base, and support. So the point behind what I'm trying to tell you is this is, as I've told you, this is just a massive move. I'll come back over here. This is a massive move. I mean, we can come all the way over here to weekly, and you can see that we're still very strongly bullish. We're above the 382 level. This is a moderate pullback. You can see here that we're seeing very moderate, real downward trending yet. We have now moved into downward trending on the pressure system, and showing a new trend potentially setting up. But these are very big, exhaustive types of days. So -6%, -2.3%, -2.8, -2.6. These are very big days, guys. And like I said, I think you're going to find that at the end of this week and or next week, it's more than likely related to external pressures. So it could be global banking, it could be Asia, could be Bank of Japan issues. I'm trying to dig into the Bank of Japan and figure out what's going on, but I want you to understand that this is unusual, very unusual, almost like a large disruption has taken place. And these gaps are another big sign of the large disruption. We'll see if this support holds up. But this has been a very large disruption going back now 2.5 weeks. And it really centers around Joe Biden leaving the bid for the presidency. I think that set a whole domino effect of uncertainty playing out in the markets. Okay, guys, that's it for now. More later.